Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Yeah, Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm excited. I'm fired up. We are at a new all-time high. It just keeps coming and coming and coming. I don't think the market's ever coming down at this point. All right, maybe it'll come down eventually. But point is, we are continuing to rise. Markets are up 8 this morning in the Nasdaq, 8 in the S&P, 35 in the Nasdaq. Do me a favor, if you're new to the channel, click that subscribe button, hit the notification bell. If you are a regular, do me a favor, hit that little like button. The algorithms love it when people hit that like button. Type something in the comments. All of those things really help people to find out about the channel. Please help me to spread the awareness of the channel. That would be amazing. All right, let's go ahead and dive in. S&P this morning, we're up 8. We're up 8 this morning, continuing this, I'll just call it an almost unrelenting rally in the markets. Unfortunately, yesterday, we didn't quite come back into our potential reversal zone. We came really close. And did not get filled in this little potential reversal zone. So since we came so close to the zone but didn't get filled, I do want to switch this to a confirmation entry. It's a very standard rule of ours that when price comes very close to the level and doesn't pierce the level or get into the zone, we switch it to a confirmation entry. And the reason for that is first and foremost being safe and looking at preserving our capital at all costs. Now, that being said, still a pretty good entry if price does come back down into that level. We are getting a little bit of a pullback as of now. In the overnights, we put in a new all-time high. So when you go to a 15-minute chart, there could be a decent little opportunity to get in somewhere right around the European market open in these levels up here. This area here would be a retest of this area of resistance. So if we pull back to this region today, keep an eye on this little level today for a 15-minute area pullback. Stop it. Obviously go below the pivot in this case. Now this is a 15-minute level, very close to this high. We could get a little rally off of here. If we base inside of here, you actually may get a little bit of a move down from there to go a little further if you want to try an intraday short. But remember, our rules about shorting at an all-time high is that you don't tug on Superman's cape, you don't spit into the wind, and you don't short the all-time high. Next would be the Nasdaq. So our Nasdaq level, I did look at this area as a potential last night, and yesterday we talked about it in the DMC and said it wasn't a great area, especially since we had the basing so close to it. And price didn't come back to our hourly level in this one either, and we quickly moved away. If we look at that same 15-minute area in the Nasdaq that we just looked at in the S&P, it would be about this area right in here. So it could be this zone in here for a potential reversal in the Nasdaq. Or you could take a breakout to the upside. In all of these, the upside breakouts are continuous plays that can always be used as well, just waiting for price to break out to the upside. We did an analysis of on the daily chart of the S&P and saying, okay, where's the next stopping point for this thing? And I will say that when you do that analysis, the best way to do it is to take a look at the most recent move from when we placed the all-time high. So if we look at when we placed the all-time high, which would be this green candle right here on the 28th. So just pulling this fib from the last swing low to the all-time high, what you do at that point is you use a Fibonacci extension. And when I use a Fibonacci extension, let me turn all these on. So we're going to do the 1.236, the 1.382, the 1.618, and then we'll do the 1.5. So these are all our Fibonacci extensions where we could see a slight reversal in price. And the reason that I'm doing this, so the first one was the 23.6. Oops, I guess I should make it where everyone can see them. And let's put them at I'll put them at a very obvious color. Let's use this dark blue here. Okay, so when I pull the daily version of this, looking at that last, from this low here all the way up to where our all-time high occurred, we've actually we slowed down at the 23.6 retracement, we slowed down at the 50% retracement, and now we're coming up to the 1.618. I say retracement extension of the last move. If you do want to take the larger one, you can go actually to the other prior swing, and it changes it just a little bit, raises that extension just a little bit near that 3150. Now my point being is that near that 3150 area is where our Fibonacci extensions tell us that we could start to see a little bit of slowdown in this rally. So people are asking, well, where's this going to stop? Is it unrelenting? I think we still have another 20 points left in this thing from using the extensions. Now, there's no significant supply up there for us to lean on, but it is something to at least consider and think about. All right, moving on, let's go take a look at crude oil. So in crude, we did have a 15-minute level yesterday. So let's go talk about our 15-minute level that hit yesterday, as we based a little bit before the level. So I would be okay if you decided not to take it. But price came into our level. We got a nice little move away. 1, 2, 3, 4, 5, and then on that 6th candle, we just got punched in the throat. The market came down, blew right through a stop loss in that case. But it did come to the hourly level later in the day, got us a little bit of a fill, and then we got a decent little move away. But then the market kind of stalled out. So the move away on the hourly chart was better than the 15-minute zone, but then we just really kind of stalled out and didn't go anywhere. And looking at it on a 1 hour, we can see that it kind of just stopped. And so 6 candle rule comes into effect. You either move your stop to break even or you take some money off the table. In this case, it didn't quite make it to the opposing fair price value area. But that's why the next time we came into the level, we popped through the zone. And so now, the hourly level did work. The 15-minute level, not so much. Now, as I look at this, I'm taking a look at this on a 15-minute chart, and I see this formation occurring here. So keep an eye on this one for today. If you want a slightly more, probable entry, you can always take the origin of this speed candle as it formed and gave a strong move down. All right, next would be gold, and gold is another one that we got a little bit of a 15-minute hit. So 15-minute hit in gold yesterday as we were looking at this little wick over wick area, and the market just blew right through it, just cut it like a knife through butter in that particular level. And so that one definitely did not hold. And going forward, that was the origin of a really strong rally in price. So we've actually come back to one of those demand areas in here, and we're getting a little bit of a bounce off of that. If we continue to get that bounce, I would be interested to see if we get a reversal at this area up here. So just keep an eye on this area as price returns towards it. I don't know that it's a quality enough level to take the short. When I look at this on a 4-hour chart, we are still kind of in between that zone. For those of you that took our gold iron condor that we've talked about a few weeks ago, you are probably reaching your expiration point here very soon, and it worked out for full profit. Same thing with our crude oil iron condor that we talked about. So remember, options on futures are a very viable thing to play as well. All right, let's look into our bonds and currency markets. So the first one being the 10-year note. So in our 10-year note, we came super close to our breakout entry. This breakout entry is still active, even though we didn't get into it. So I'm just going to move this line over here. Remember, this means I need basing inside this area to make it worthwhile. Level still valid, so is our demand level down below. In the Aussie, our Aussie trade, now this is an example of following the rules because price came really close to our level and then moved away. And if you remember what I said earlier, what do we do when price comes really close to a level and then gives us a move away? We convert that entry to a confirmation entry. Now, in that case, there's no fill on this trade at this point for this wick over wick. It did, however, come down to the next area of demand, and we got a really strong move away from that zone. So if you took that second level after the wick over wick was done, then you got a really nice move away, which is a pretty standard way to trade that type of a zone. We are getting a little bit of a sell-off now. Well, not sell-off, but a little bit of some selling pressure coming in that could lead to another opportunity to get long on a reversal. And so that would probably be somewhere down in this region here, this 681 area. Next would be the euro. So in our euro level, once again, this is our confirmation entry that then got triggered the other direction. So we were basing in front of it. And yesterday morning, that's the reason why we switched it to a confirmation entry. So price blew right through the level, and very similar to what the Aussie did after breaking through a confirmation entry, it reversed at the pivot just around it, and that's what we've gotten so far on this one, is it's reversed from that pivot. The demand level here is still a really good area of demand, and when I move this to a 4-hour chart, our 4-hour chart is definitely in an upward trend. Our momentum is slowing just a smidge. So if you want to try to get ahead of maybe a next leg down, if that occurs, you can look for a breakdown below this line for price to fall a little bit and look for a little move down to that next zone. Canadian dollar. If you take a look at our Canadian dollar, we actually got a hit on an entry. 1, 2, 3, 4, 5, 6 candles later, we had done nothing, which tells you either move it to break even or take money off the table. And so now we're basing in front of this level. So now what I need to do is I need to remove that level. The level's not going to be valid to me any longer. Now, looking at that zone, we could use this as a breakout to the upside, but the problem with this is I don't have room to roam. And the reason I don't have room to roam is because my pivot right here is still a valid supply area. So you could take, if you believe in being more bullish than bearish, you could take the breakout and just be very quick with your stop. If you are more bearish than bullish, then take the supply area of the pivot just above, or wait for a breakdown below this current basing area. I like the breakout to the upside, but that pivot there kind of scares me off of it. And what I say in those cases are there's usually better things to trade out there. All right, looking at Nat Gas, Great British Pound, Japanese Yen, and Copper, our other markets. By the way, we had a Nat Gas level for those of you that trade our gap and go on Friday, on Sunday night. Our gap and go entry is to get short when it gets below the first candle's low, and this one was from our Sunday night live trade room, so this one is really still marching down nicely. We came to our confirmation long, and it blew through the level, telling us that confirmation long was not a valid entry because it was confirmation. That's why we did it that way. Great British Pound, we've actually now come back to our 15-minute level. We're getting a little bit of a reversal candle on the hourly chart, but remember, we found it on a 15-minute level, so our 6-candle rule applies on the 15-minute level. We are 1, 2, 3, 4 candles in, and if we don't get a move above this 29.49 or even above this 29.50 area soon, we're going to want to close this position a bit early. 6-candle rule, remember, is designed to keep us out of bad trades and get us out quickly. Japanese yen, very similarly to what happened in gold, we popped up through a level. So yesterday morning we had an announcement that caused some of these reversal levels to get blown through. That was the problem in the gold level as well as in the oil level. And so just know that announcements oftentimes can do that and cause markets to break through some of those levels. When I look at the yen for now, I just don't see a quality zone to lean on a 4-hour time period, and so or a quality trend identified. So I'm going to leave it be. So all in all, these are our markets for today. If you have any questions on them, please feel free to send us an email, support@tradersarmy.com. We're here to help as best that we can. Do me a favor, share the video somewhere today. Throw it on your social media pages. I would really like to get some awareness out as to our daily market commentary. I've had a lot of great feedback on some people that are watching it and enjoying it, and I'd love to get it out there and share it a bit more. So thanks so much, everybody. Hope you have a great day, and I will talk to you soon. See ya.